Welcome to Alpha Action. Today we're going to be doing our daily call, which consists of a Chipotle trade idea. And so what we're looking at right here is that we're going to be talking about the valuations, and we're going to be talking about it from a bottom-up perspective, and then also a trade idea based off of those valuations. So first, let's talk about the risk-free rate and growth. And so when we want to value a company, we'll generally look at the risk-free rate as a proxy to how much we want to value it at. And so the current risk-free rate is around 2% nominally in dollars, and that brings the price to cash flow ratio to 50 for the risk-free rate. Chipotle's free cash flow growth of 37% annually if the current trend continues. The operating expenses grow by 21% if the current trend continues. And the company hasn't become vastly more capital efficient because the cash flow grew, but the operating expenses grew, even though the free cash flow grew by more than the operating expenses. And although the free cash flow seems good, the next question becomes whether it's worth the PE of 76 and if it's sustainable. And so the free cash flow growth and current cash flow should give the company a price cash flow of approximately 125, assuming that the cash flow is risk-free. And so that's what we're going to come upon next, is whether that cash flow is actually risk-free. So the average rate of return of the Standard & Poor's 500 is approximately 10% nominally annually, and then risk-free rate is 2% nominally annually. Equity risk premium of 5 times the risk-free rate. And so we need to find whether Chipotle has a competitive advantage, because what generally happens is if you have a competitive advantage, consumers are willing to pay more for your product rather than your competitor's product. And so now, even in a downturn, since the consumer is willing to pay more for you rather than the competitors, since you have a pricing advantage now, you have less risk. And so competitive advantages or moats make a big difference. And Chipotle just lacks a competitive advantage. Consumer isn't willing to pay more for it over other competitors, and the business can run easily if someone else were to replicate it. And so because of that is a lack of a moat. And this means we can give Chipotle an equity risk premium of 3x. And so we don't want to go the full 5 times because that'd be for more cyclical, unhealthy balance sheet, and that'd be more of a mid cap. And so right here, it's a large cap, healthy balance sheet, and then it's also somewhere between a consumer staple and a consumer discretionary. And so it's a bit of a safer bet in a downturn. And then that puts the valuation at $515 per share. And this obviously depends. If you're looking more towards it being consumer staple, you might give it a higher valuation. If you think that this is a consumer discretionary, you're going to give it a lower valuation. Okay, so what's the trade? You could do this as a long-short trade, short Chipotle, long another underlying. But the way we want to go about trading this is with options to show a short bias to the market. So we'll go long the January 17 810 put, short the January 3rd 810 put, long the 830 835 vertical call debit spreads, and roll down and over consistently. And so using the above trade, it's more capital efficient because options are cheaper than the underlying themselves. And so you want to look at the amount of capital you're putting up to the amount of delta you get. And so you're getting more delta per capital if you use the trade that we're giving than naked shorting. It reduces cost basis because of the short puts you're selling on the long puts that you own. It provides hedging because of the long call vertical debit spreads, and takes advantage of the mean reversion of the IV rank. Right now, IV rank is very low. That's going to revert to 50. We don't know when, but it will at some point, and we can take advantage of that right here. Thanks for watching. Please like, comment, and subscribe. Turn on the notifications. Until then, have a great Christmas.